Welcome to Ivanoff Retirement Insights with Paul and Travis Ivanoff. The father and son team at Ivanoff Advisors and Ivanoff Wealth Management helps clients grow and protect their wealth. Paul and Travis understand the importance of having tax-advantaged, reliable income in retirement, protecting your assets, and helping you achieve your retirement dreams. Now, Ivanoff Retirement Insights.
Yes, hello, and welcome to the show. I am Casey Biddy, and each week I am joined by the father and son team, Paul Ivanoff, insurance agent with Ivanoff Advisors, and Travis Ivanoff, investment advisor representative with Ivanoff Wealth Management. And they are here to break down the topics that matter most to your retirement. Now, before we dive in today, if you've got questions about your own plan, the Ivanoff Retirement Roadmap is a great place to start. It's your chance to sit down with a team and get advice that's tailored to your life, your goals, and your financial future. To get started, all you got to do is give us a call, 714-553-1490, or you can find all the resources that you need to get connected with us on our website at ivanoffinsights.com. So guys, let's get into it. JP Morgan Chase CEO Jamie Dimon sees no end to uncertainty in this economy. Bloomberg TV asked him to give his chances of a recession. Take a listen.
I'm going to defer to economists who give it about a 50% chance. Tariffs, and of course the geopolitical situation is very tense, very difficult. I think all these things are probably inflationary a little bit more and slowing down the economy. If there's a recession, I don't know how big it'll be or how long it'll last. Hopefully we'll avoid it, but I wouldn't take it off the table at this point.
So it sounds like no one really knows. So Travis, how do you plan with clients who are nervous about retiring at a time when interest rates, politics, inflation, and recession fears are all competing for attention? What's your approach?
I think when we're getting into this, the market was never meant to retire off, right? It's going to go up, down, or sideways every single day. We know that to be true. So if we're talking about retirement, I'll ask clients, hey, are you a gambler? And they go, well, what does that have to do with anything? Well, do you go to Vegas and are you willing to put down, $100 on a hand and hopefully you win, hopefully you don't lose, right? And they go, well, that's kind of crazy. No, I'm not a gambler. All right, well, when I'm looking at your statements and your, with your retirement plan or your 401k, whatever you're currently in, it appears based off, what your holdings are. If the market does go into a recession, it looks like in 2022, you lost like 20%. Right? So we're looking at those numbers and go, now that you're retired or almost retired, are you comfortable with that same kind of loss? And, for example, if a client has $1 million and we lose, 20%, okay, we're going to lose $200,000 on that. Are you comfortable with losing $200,000? They go, no, absolutely not. Okay, then we need to have a discussion because you just heard it. No one actually knows. You said a 50% chance. Maybe we will, maybe we won't.
Right.
I don't know.
Right.
And that's an honest answer. No one actually knows. So what we do know is there's tools that we can use to help protect your assets from going down in the market. Not all of your dollars should be invested in the S&P 500 or, at market risk, right? Because again, up, down, or sideways every single day. And if we can't withstand a recession, we need to look at your retirement planning and we need to mostly focus on income, right? Income is the outcome that matters when you retire. You can't live off paper gains and paper losses. So if we take a deep dive into your portfolio, do you have too much risk? Do you have things allocated for income? Do you have some downside protection? Do you have safety? Or are you just hoping with, the market's always going to go up? And sometimes we'll hear from, people that come from our dinner seminars or our radio show. Hey, well, I'll just buy and hold, right? I mean, it's worked for me in the past, but we have to bring up to them, look, before you weren't living off these dollars and you were adding money, you were contributing. You're no longer contributing, and now you need to create paychecks off of your portfolio. So do you really want that risk in your paychecks based off something that can go up, down, or sideways every day? So that's why we sit down with clients and we build out the Ivanoff Retirement Roadmap in order to give you some, a clear vision of what your retirement looks like. Okay, how much is Social Security going to provide? All right, do you have a pension? Do you have rentals? What does that look like for you? Do you have an inheritance, right? And we tell clients, don't count on an inheritance because Uncle Sam is and nursing care facilities are as well. So those are the things we're going to build out in our Ivanoff Retirement Roadmap to make sure that you are not just going to go up, down, and sideways or buy and hold in the market, because that's really no way to retire. It's not going to give the sleep insurance or confidence you need.
Absolutely. Well, if all the headlines have you feeling unsure, like we're talking about, you're not alone. But there's good news. You don't have to figure it out on your own. Paul, Travis, and their team are here to help you build a plan that is designed to weather that uncertainty so you can retire with that confidence, no matter what the market or the economy is throwing your way. Give us a call. Let's set up some time to talk. Let's take a look at your plan. 714-553-1490, or you can find us online at ivanoffinsights.com. So, guys, the Wall Street Journal did a story outlining the benefits of an IRA to Roth conversion, saying that staying in a lower tax bracket can extend your portfolio longevity by up to 7 years. However, doing a conversion while you're on Medicare can increase your premiums. You've said that the conversion process could take 5 to 10 years. So, Travis, my question for you is, should you try to finish your conversions before you go on Medicare? What's your take here?
I mean, in a perfect world, it would be ideal, but there's so many variables you need to factor in, right? Mm-hmm. Because as you're working, are you making, well into six figures? Or are you already at a very high tax bracket? Mm-hmm. It's not so black and white. That's why we bring in some of our professional connections here. We work with a really good tax strategist that helps us build these ideas out. So ideally, if you can do it before IRMA is affected, that would be great. But there's other factors we need to consider as far as income, bonuses, things like that. But that's where we bring in our team and we rip through your taxes and see if it makes sense. Now, I also mention to clients, even if they're concerned about IRMA, look, that's a short-term pain for a long-term gain if it makes sense for you, right? Mm-hmm. If we can Roth convert, sure, maybe your IRMA is going to be higher for the next several years. But if you don't do it and your required minimal distributions are through the roof, your IRMA is always going to be higher. So we have to look at different variables when we're doing the planning, right? We need to make sure that we're looking at your current income. Are you going to have big pensions? Are you going to have Social Security? What does your retirement income look like? That way we can do some Roth conversions, whether you have IRMA in there or not being adjusted. Because at the end of the day, the money that we are able to convert, that won't be affected by required minimal distributions. And then therefore, some of your money will never be taxed again instead of all of it forever being taxed. So it's not an easy yes or no. It's really bringing in our different professionals we work with and seeing what makes sense for you and building out a tax efficient strategy with our different accountants that we work with.
And it's important to remember too that tax strategy, it's not just about this year, it's about your entire retirement. We've got to look at the whole picture. And if you're listening, you're in luck because Paul and Travis, along with their team, can help you map out a Roth conversion plan that's going to maximize tax efficiency while minimizing those surprises like higher Medicare premiums. So give us a call. Let's set up some time to chat. 714-553-1490, or we are online at ivanoffinsights.com. Now, guys, if you've got some travel plans coming up this summer, you might want to think twice before flying with a lithium-ion portable charger. Those can pose a fire risk if they overheat, and lately, TSA agents have been seizing those power banks from carry-on luggage if the battery is too big. So I wanted to look at this, you guys, from a retirement perspective. And Paul, let me ask you, when you do a portfolio x-ray, what sort of flight risks have you seen in people's plans that can cause a quote-unquote financial fire for them?
Well, what we see with a lot of our clients is they really don't have a plan. They might have several advisors, banks, brokerage firms, and what have you, and yet one doesn't know what the other's doing, so they don't. You have to have all the pieces of the puzzle put together to see what to do. Planning is better than guessing, and if one hand doesn't know what the other's doing, well, where we come in, we're more of a quarterback. We put it all together for you.
Mm-hmm. Travis, any final thoughts here?
Yeah, definitely. I mean, when we're looking at the portfolio x-ray, if you will, we kind of do the same thing. And first off, the purpose of money dictates where you put it. We want to know what every dollar is doing and how is it serving your portfolio, right? Well, I have these, all these, long duration bonds, or I have these mutual funds. I don't know what they do. I don't know how they work. So oftentimes clients don't really understand what their portfolio is meant to do and what it's actually doing. So we need to point out, hey, these are your benchmarks. By the way, did you know you're really risky? Because we do a risk analysis in our office and we ask clients, and oftentimes they're conservatively moderate is usually where people fall. But then we look at their portfolios, which are oftentimes more aggressive. So we have to explain what that risk means in retirement. And then we're looking at some of the hidden fees. Hey, you're loaded with mutual funds. Sometimes they have higher expense ratios. Are you aware of that? We're looking at, the amount of trading that's going on in different accounts when they come on board. And they feel like they're always market timing. So we need to look at, okay, does the risk add up when we're doing an x-ray of your portfolio? Is it as tax efficient as possible when we're talking about non-qualified dollars, et cetera? Are there fees that you weren't aware that you're paying, right? It's not just your advisory fee, but how much does it cost to own the funds you have? And did you pay commissions? Are there mutual fund expenses or commissions on there? And then are you staying disciplined and focused? And are you comfortable with the amount of risk that's in your portfolio? Because we say, buy and hold or stay disciplined, stay focused, make small changes. But if you're not starting off on the right foot to begin with, well, we do need to make some changes, right? If you're too aggressive in the portfolio, that's going to be an issue. So we kind of look at it as building a house, right? Is your foundation strong? Do you have some safety built into it? Are the walls actively managed versus just passively managed? And then the roof, I talk about clients, look, if we want to add some risk in there, we'll paint the edges. We'll make sure we get some big returns, but we don't want to, ride and die on just those big returns. We want to make sure that we are doing this very systematically and disciplined. So we've given you a lot to think about, but the best thing is to come in our office, come see us, take us up on our offer of a no cost, no obligation first appointment and get that second opinion. And if you never had a first opinion, we'll give you your first as well. But we'd love to see you in our office and build out the Ivanoff Retirement Roadmap for you.
Absolutely. It's scary to think that your retirement plan might be carrying those hidden risks. So Paul and Travis and their team at Ivanoff Wealth Management and Ivanoff Advisors can give your portfolio a full safety check. So schedule some time with them, sit down, identify those hazards before they disrupt your financial future. Give us a call. We would love to get you on the calendar. 714-553-1490. That's 714-553-1490. Or you can find all the resources that you need on our website, which is ivanoffinsights.com. IVANOFF insights.com. Thanks so much for joining us here on Ivanoff Retirement Insights, and we'll see you next week.
Investment advisory services offered through Ivanoff Wealth Management, a registered investment advisor firm. Registration is not an endorsement by security regulators. By contacting us, you may be provided with information about insurance products, including annuities offered through Travis Ivanoff, California CRD number 325275. The firms are separate entities. Annuity guarantees rely on the financial strength and claims paying ability of the issuing insurance company and are not offered by Ivanoff Wealth Management Incorporated. Read your contract for restrictions, limitations, or penalties. Ivanoff Wealth Management is not licensed in all 50 states. To find out if Ivanoff Wealth Management is licensed in your state, please call 714-553-1490. Ivanoff Advisors is not affiliated with Ivanoff Wealth Management Incorporated. Advisory services are offered by Travis Ivanoff through Ivanoff Wealth Management. Insurance services are offered by Paul Ivanoff through Ivanoff Advisors. The aforementioned are unaffiliated companies.